Hello, hello. We are Crypto for Joe, cryptocurrency and blockchain ideas for your average Joe. Speaking today with Cayman Nava. Cayman, how's it going?
It's going well.
Okay, so one of the fun things to do in this space, you can't talk about money, money, money all the time. I mean, it is what it is, and people are becoming more aware. But I like to look at future scenarios. Okay, so in other words, what's going to happen when banks this has the potential to eliminate a bank. What's going to happen to banks? Like project us ahead, like 10, 20 years. What's going to happen to banks? What's going on with that space?
Well, 10, 20 years, that's a long ways out.
I know. Trick
Yeah,
question.
yeah. But there's definitely will be some competition with banks. Like I'm thinking about this savings accounts at banks. You get 0.001% annually, on your whatever $100. And it's like, okay, I earned 1 cent or less than 1 cent for the whole year. You got that. I feel like that it may be a lot harder for banks to keep their customers' money. There's just a lot of other opportunities for keeping your money productive in crypto systems, and not in a way that's like hard for average people. It's like they have very high level kind of hedge funds for normal people in cryptocurrency. And so I don't know exactly what that means for banks. They're going to have to step it up or see the door.
Start selling roses or something. Or how about borrowing? Well, like, what's that going to look like? Because I mean, you look at some of these, even today, some of these auto loans, if your credit's horrible, it can be like 20% to borrow money to buy a car. But so, like, what's borrowing going to look like on the Ether network, for example, versus at a bank?
Yeah, I'm not too sure. A lot of the loans that happen on Ethereum or on the Ether network right now are fully collateralized, or I think all of them are. So, usually you get an auto loan because you don't have the money in the first place. Like I don't, you don't have anything to put up to get that money. So, yeah, that would kind of I think that had to be addressed first on.
Well, but a group of Ether stakers could say, hey, I don't know how they would vet you, but like, I guess theoretically, if they could cut it in half, they go, hey, look, we found a way to vet you, which is probably also blockchain driven, and we're going to cut you in half. So from 20, you go to 10%. So it's kind of easy to imagine ways forward in that. I
think having these like very predatory loans might be a little harder to justify, harder to sell.
More susceptible to getting moved over.
Absolutely.
So how do you see like what's a banker's first move? If you were a banker, a traditional banker, and what would be your first move knowing that this is coming?
Would be to hold some crypto assets, probably. That's just step one, is like buy Bitcoin and ETH.
Fun stuff to look at anyway, but we appreciate you today, and see you soon. Thank you.
Yeah, thank you. Thanks for having me.